Hello, Kit Crowne here, your mortgage consultant for life. Welcome to this week's Mortgage Moments video. Every day for the past 17 years, I've driven past a construction crane rental yard and watched without a lot of conscious contemplation the ebb and flow of cranes parked in its lot. Sometimes the lot looks as if they've gone out of business, only one or two of them occupying the many slots reserved for these mammoth machines. And other times the lot is bursting at the seams, the rows of eager hoists poised and seemingly beckoning onlookers to take them for a test drive. I suppose that could be my Tim-the-Toolman More Power fantasy working overtime. A few years ago, I began to synthesize an economic theory based on the number of cranes in their parking lot, correlating the rising or falling number of these behemoths of the building trade with the general state of our economy, or at least what I can see of it from my corner of the world. Sure enough, there it was. From these observations, I came to see the rising or falling number of idle cranes foretold what was to happen in our economy 3 to 6 months in the future. For the last several years, their parking lot has been nearly empty, even in the harsh winter months of Connecticut. That correlated well with what I saw going on around me. Lots of shovels in the ground, new commercial construction happening everywhere I looked. I think most of you, when you stop to think about it, have observed the same thing. New apartment complexes being built, new retail spaces popping up in those once vacant parcels, a frenzy of activity after the long drought that followed the dark times after 2008. But lately, a different trend has been emerging, and it's not welcome news, I fear. For the last 4 months or so, the cranes have been coming home to roost, the nest nearly full, and based on my theory of future economic activity, foretelling a soon-to-come recession. Now, I'm not alone in forecasting a looming recession. Around the globe, economists and business leaders have been warning that our economic expansion, officially the longest on record, is coming to an end. Even the Federal Reserve, always the late-to-the-party ballroom debutante, is making accommodation for the softening economy by lowering their overnight lending rate. Well, what does this mean to you? First, I don't think that this will be a horrible downturn. I don't. I think you'll feel like the fizz went out of the punch, a sort of humdrum and unenthusiastic vibe that pervades rather than massive layoffs and failing businesses. My instincts are that for a couple of years, you'll see fewer job openings, more vacant storefronts and half-filled apartment complexes, and for those who live on the margins or in the new gig economy, they'll get pinched because there won't be as many opportunities to make money. My secret sauce for survival is simply this: make sure that you have savings that you can harvest if the bad times come to roost at your house. Liquidity is a solve that solves all economic woes, and as stupid as my stupid sayings are, this one always rings true. There's nothing like having money in the bank to make you feel like you've got money in the bank. Well, that's it for this week. Thanks for watching, and remember always that I'm here every day to help solve the problems that living life on life's terms sends your way. Keep my number close by so that you can reach me anytime you need my help, or anytime someone you care about needs someone who will care about them as much as I care about you. See you next week.